This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. It was the day, and as you can guess by the corn, the day is USDA Day, where we finally get some new news across the wires to get us excited about, and we saw some markets react accordingly. We saw corn trading in a really wide range. Now we're looking at some very key technicals going forward on a closing basis. 370 on support is going to be a must-hold area for the bulls, and break and close below here, I think, puts a little bit more pressure on the market. On top of that, we have a seasonally weak time of year. In fact, if you had sold November 8th and bought back November 18th, you would have been profitable for 13 of the last 15 years with an average profit of just about 11 cents. So something to keep in mind there. But if the bulls are able to kind of change that trend and get out above technical resistance near 378, I wouldn't be surprised to see funds extend their length. So very key pivotal technical levels to keep an eye on as we round out the week. Now over to the soybeans. This has been the most interesting market for us here today. We've been working with clients and prospective clients going into the report and tightening some things up to the short side. Now last week we saw the big pop higher on the back of a tweet that was later brushed off as really no new news, but we didn't see the market retreat. And that was a caution flag for the bear camp. We know that the market and the market sentiment is overwhelmingly bearish, but still not able to break. This is a caution flag. We got the bearish report, broke down to key support 865. I think this was a buying opportunity for a short-term trade, but 880 is going to be a pivotal point to round out the week. If the bulls stabilize above here to round out the week, I wouldn't be surprised to see additional short covering from the funds, which is what we saw last week, take us a little closer towards that $9 level. Now moving over to the wheat market, wheat, kind of trading in a little bit of a range as well. 5 to 520 has been the pocket that we've been looking at, and really there hasn't been a whole lot of conviction, just kind of lingering right in the middle of that range over the past several sessions. I like to be bullish this market because I think the dollar will soften up, and that'll help exports pick up for the wheat market, but we really need to see a technical breakout above 515 to 519 to get excited. I think that could potentially lead to another 15 to 20 cents of upside. So that's what we're looking at to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.